This is John Piper with the weekend video clip, and it's Saturday the 12th of April. I mentioned in yesterday's report that I'm planning to start a trading room. In fact, this decision has been made to go ahead with this, and I want to say a few words about this and discuss a few markets and explain how the room will fit in. Firstly, I must say this is something of an experiment. My colleagues Mark Austin and Cameron Malik run trading rooms on shorter term trading strategies. Now these work really well. The strategies lend themselves to particular times of day, so people know when they ought to be trading, and the strategies are relatively simple compared to longer term trading strategies. So as I say, there's something of an experiment which I'm hoping will work really well, obviously, because it's I like things to work, but we'll have to see how it develops. I mean, it's all about the individual traders getting good value from the room. Now, primary point, a big call has always been an educational service. It's all about helping individual traders become successful in their own right. Okay. Now, the key point here is what I said in The Way to Trade, my first book on markets, which was the subtitle, Discover Your Successful Trading Personality. It's my view that it's absolutely critical that every trader has a way of doing things that will be different from other traders, and you can't mimic another trader successfully. I know a number of highly successful traders, and they all do things differently. Different markets, different techniques, different time scales. You know, this is the important aspect of trading. You can certainly base your strategies on somebody else. So Mark has a very successful trading strategy, but people struggle to actually do the same things themselves, and they need to vary the procedures so that they make it work for them. So the same is true with this. I'm in this video going to outline the trade on the Dow that I mentioned. I can't recall the actual day now, but I sent out a chart. Actually, it'll tell me from here about it. I think it's probably Thursday morning. I sent out the chart which set the scene for the trade, but obviously there was no trading room to actually explain in more detail. Although because I have anyway, the point I'm making is, let me go through that trade. Now the point with the Dow is we've had this market that has been rallying since 2009. Right, that's quite a long time, 5 years. I think it's, one could say without too much hesitation that it's about time we saw a decent sell-off. Okay, now saying that is one thing, but actually seeing the technical indications that indicated it might actually be coming in is something else. Now we saw this in this day here, right? I isolated that as a key reversal day. Right, this is the hourly chart, and the key reversal day came in on the 4th, last week's Friday, and the key thing was we saw a break to the upside, which then failed. Now the failed break itself is a sell signal. The key point though is a key reversal day when you then break support, so it clearly broke the previous day's support. And we then saw an impulsive decline. Okay, so we've got two factors there. We've got the firstly, 3 factors. We've got the market having rallied 5 years. We've got the false break to new highs, which is discussed in The Way to Trade and also in binary trading. I should mention I do expect people in the room to have read my books, because I don't want to write a book answer questions. These things are quite detailed. Sorry, what I'm trying to say is that some of these techniques are quite complex in a way, so you really got to do the underlying reading if you want to understand it. And if I get a question that is answered in the book, my answer might well be, well, please read the book, because it's important to put that research in. If you want to become a successful trader, you've got to do the work. It's no good. No one can do it for you because it's your journey. Anyway, we saw the impulsive decline, and we then saw an ABC rally right up to 61.8% retracement level. Now that set the scene for what happened on Thursday. So we'll now go down the leg again. Okay, so here's the action, that's where the chart essentially on Thursday went up to, and here's the action that came in on the Dow opened at 2:30. I mean, initially it just went sideways, but only over this is a 10-minute chart, so but the first hour was just sideways, neither one thing or the other really, but you notice we did see these the markets hitting the Fibonacci level and then failing at that level. So it's a bit of a triangle actually, but the sell signal came in around here. I think I had an order in the market. I think I was out at the time, but the and again it just fell back quite dramatically. So that basically set the scene for that trade, right? Now one doesn't know when the trade might come in. You don't know whether it's going to be a successful trade or not, because that's the nature of trading. With longer term strategies, you tend to get a lower hit rate because you're looking for bigger profits than you are with shorter term strategies. With a shorter term strategy, you may only have say a 10-point profit target, and obviously there's far more chance of getting a 10-point profit than there is of getting a 90, well in this case a 200-point profit in fact. So at that point, that covers that trade. Now yesterday I said we might see an extension. Well, we did see an extension, but most of it came in with the opening move. So there was nothing to trade after the Dow opened. I did try a couple of things, but it wasn't terribly useful. The tunnel prices were always high. I never saw a tunnel opportunity. At one point the 200 was 95 actually, but I missed that. It was very fleeting. But even then it wouldn't have been a very good trade because the thing never really went anywhere. I mean it closed here at 170 odd and closed. So it was down 150 points, down about 170 here. So there would have been a tunnel opportunity, but the prices were never that attractive. And I mean, in the tunnel trading book, which is another sort of required piece of reading for the trading room, it does explain the 20x system, which is what I use for this sort of thing. Okay, I noticed I've now spent 7 minutes talking about this, so I guess I better actually talk about what's going to come next, which is the main purpose of these videos. There will be a special offer for the first month in the room, so if you're interested, please get in touch. As I said, pro traders come in for free anyway, obviously, because that's part of the nature of that particular product. Okay, let's go and look at the Dow and where it might go next. Right, the first one to make is that we have options expiry next week. Options expiry tends to be a quieter affair, or at least two-way action. However, that does get blown away by market forces when market forces are strong enough. Currently, we have what could be an ABC. I mean, this could just be a corrective move. At this point, I think it's probably about the same length. Let's see, we've got high at 16,620 down to 16,180. That's about 500 points or so. So this move is not quite as long at this point in time. Well, it is actually getting there, but it's not quite as long at the moment. I would think we're probably going to see a break of 16,000. That would seem like a fairly likely. 16,000 is just there, so it's not hardly very far away. I think also, given an expiry week, we might well see a bounce early in the week. That would set the scene for the bulls thinking it's all just an ABC, and giving the bears an opportunity to re-short at higher levels. But it's what comes next that counts. So a really strong rally here would tend to confirm the ABC, suggesting rallies. You need to become aware, obviously, for the room, what ABC means and the implications of ABC correction. There are books I can recommend for that sort of thing. I mean, it's very simple, really. An ABC is a corrective move. A, B, C, suggesting that we're going to see upside. A 5-wave pattern, like this, is an impulsive move, suggesting that we're going to see a correction, i.e. an ABC, but we're then going to go higher again. There's a video actually on YouTube I produced which does explain that. I think it's had 90,000 viewings, which is quite surprising, really. But anyway, it is there. I'll try and dig out the link for those of you who want to see that. Anyway, so the point I'm really making is that at the moment there's no definite confirmation that we're seeing an impulsive decline. We may not see it next week with expiry coming in, but after expiry things could change fairly dramatically. We can have a look at FTSE now. Big diagonal drift, 5 waves down here. I mean, it's all being extended 2-wave. It's not totally out of court to be extended 2-wave. We then started to fall back here. So let's go down the scale. If this is all a correction, then that is the peak. I mean, I think it was 1 point more than this peak, but it's still the peak. So that could be a 1, it could be a 2, or it could be a failed extension. We then saw a possible 5 waves down here. 5 waves means that that could be impulsive. We then saw a correction to here. Let's go down the scale. Right, it's starting to get a bit messy here because this was actually an ABC, A, B, C. This then looked impulsive. 1, 2, 3, 4, 5. So at that point it looked like we're going to see a corrective decline. Now we haven't seen a corrective decline, instead of which we've collapsed quite fast. Let's go down to the 5-minute chart. Okay, Thursday on FTSE was quite interesting with a 5-wave decline here, which changed matter. I put in these Fibonacci retracements at that point, and you'll see the 61.8% came in there. So we got a little blip above there, and then we slid down. Not very much, in fact, but of course with the Dow collapsing, it was, we fell further. We're still a way off 6.5. I mean, 6,500 is a big support level. I mentioned the garbage low there. Given again it's expiry week, it could well be that we might see a bit more downside Monday, and then a rally for most of the week perhaps, with possibly a very major shorting opportunity coming in later in the week as expiry comes in, and we could then start to fall away. So it could be a really interesting week, in fact. I'm actually away Monday and Tuesday. I'll be looking at the market in the morning though, but back Wednesday, by which I would expect this to have played out if I'm right. I mean, it's always, as they say, if you look through a crystal ball, you end up eating glass quite a lot of the time. But it seems to be a fair case for one more bit of downside. I say Dow below 16,000, bringing in buyers into the expiry. And setting the scene for a possibly major decline, which could crash through 6,500. When I say crash, I don't mean it's going to be very fast, but it would break it in a significant fashion. Right, we'll have a look at gold now. Okay, and we talked a lot about ABC patterns when in the room and on my reports. You need to understand what I mean by that. It's really just terminology. It's just jargon. It's just a way of expressing market action. Basically, A, B, C, corrective move, A, B, C, another corrective move. The inference here is this is actually just going to be some kind of corrective C wave. It doesn't always work that way. We have built a major base on gold here. 1300 is a key level. We've seen quite a nice, possibly impulsive move here. 1, 2, 3, 4, 5 maybe. Not totally clear. But we have seen a very sharp pullback below 1300, and now it's regained that level. It's not impossible we're going to see another leg down being a C wave, so that would mean that we could see an A, B, C here. But currently I'm on the lookout for a buy signal. I mean, it's some kind of spike. Let's go down the scale here. I mean, again, fairly hard to count this, but there could be a 1, 2, 3, 4, 5 there. That could be a 1, 2. That could be a 4, and a possible 5. So it could be that we've got a C wave to come in, a C wave decline, to complete a correction after a wave 1. So that would then be a wave 1, a complete 5. Okay, with a wave 2 down to here somewhere. I mean, ideally a nice buying spike below there, but 1300 would be perfect. That would, again, perhaps time with expiry, possibly. These are all hypotheses which we'll be discussing in the room, obviously. So it's all about deciding how you should trade, the best strategies that you ought to adopt, and I'm trying to provide a basis, an educational basis, if you like, to allow you to trade in using these sort of parameters. And on that note, I think I'll call it today. It's a bit longer than usual, but I hope you found that interesting and useful. Have a great weekend. I'll be back with the opening report on Wednesday morning, unless you meet me in the room possibly fairly briefly on Monday and Tuesday, and there will be a link to the room in the report. Alright, thanks for listening, and bye for now.